Good afternoon, dear participants. Good afternoon, Alexander. I'm happy to welcome all of you on our class with Dr.Elder, the final class for this year. So that's why it's also, I believe, will be really interesting. And as usually, before we start, I will say some words. And of course, I start, let's say, each class with a risk warning, with information about risk, that it's important to keep in mind that trading and investing, those activities are risky, and you need to understand how it's working, which risk can be applied for your trading strategy or for any activities which you do on the market. So please pay attention to this. And we also touch these points during our sessions, but that's a general reminder which we normally do. For those who participate in our classes for the very first time, and maybe this is your first time when you connected with Admirals, so I just want to say some words about our company. So we are a brokerage company, so we work more than 21 years in different countries, different jurisdictions. Not so long ago, we got a Canadian license, a South African license, so we keep our conquer in terms of different markets, in terms of different area. So for our clients, we provide trading and investing service. So our clients are retail traders and investors who can use our platforms, who can trade different instruments, also invest in stocks and ETFs. We provide for our clients MT4 and MT5 platform, and we also have our native mobile app, which was developed for our clients. And also for next year, we're approaching some new platforms. It will be our own native trading system, and also collaboration with a trading view. But when it will be done, I will also say some words about this. And of course, what we launched, let's say, this year, what is important, let's say, for investors, it's an opportunity of fractional shares. So when it's allowed to invest not in the whole stock, specifically when stock is quite expensive, so it's possible to invest partially in different stocks. In Admirals, we keep a lot of attention to education, so that's why we are super happy that Alexander able to join our sessions, and we also produce different educational content in terms of webinars, in terms of our YouTube channel. So later on, I will send a link, so I want to encourage you to subscribe to our YouTube channel, because later on, the recording of this webinar will be there, and if you miss at some point our session in live every time in a couple of days, so you can watch it also in the recording on our YouTube channel. And as for today's agenda, so as I said previously to our participants who joined, we're approaching New Year, so the 2023 will end, let's say, in a couple of days, and that's why it will be great to have a quick summary, let's say, from Alexander about his feeling about markets in 2022, and maybe his feelings about markets in 2023. Of course, we can't speculate where market be or whatever, what to expect, but just to think out loud about what can be, let's say, on the markets. Of course, we will have key markets overview, as we normally do for key instruments, some stocks to review, and in the end of the session, I will also say some words about Dr.Elder's indicators, how to install them to MT5 platform, and also about our contest, which we have, where it's a great prize, the book with Alexander's signature. And also, I made, let's say, some charts as I started to do a couple of sessions ago. So just to show how the markets perform, let's say, so I put here the last year actual performance. So we see that there are a lot of companies which are on the red area for this year. Some of them are in green area and feeling quite well. So it's just, such points of attention. Sorry, this one was for ETFs, so different ETFs, like a summary for different instruments. And here is about companies. The same picture, like technological company declining, and let's say some stocks which are, for example, concentrated on oil market, on energy. So they are rising. So for this year. And that was my short introduction, say, from my side. I'm ready to pass the microphone to Alexander, and as I usually do. So, Alex, we are happy that Alexander joining our sessions each month. He shares his experience, he shares his knowledge with us, and we are able to educate ourselves with each session. So, Alexander is a professional trader, a teacher of trader, the author of greatest books, and his last book was the new trading for a living. So, Alexander, the floor is yours.
Thank you very much. Thank you very much, Boban. Very kind of you. I enjoy coming to your show because, as you know, I live in the mountains. I live in a village population 700. Now, it's not as bad as it sounds because our village belongs to a town which has one of America's top universities. There is a great medical center, there are museums, there are restaurants, but still it's a very narrow environment here. And it's very peaceful, very, very comfortable for trading. But coming to speak to the Admirals gives me a chance to interact with traders worldwide, really. Step out of my sort of bear hole where bears live. We actually do have bears running around here, not too many bulls. In any case, thanks for the invitation. You said before that we shouldn't speculate about the future. I would slightly correct that. We can speculate, and the word speculator comes from Latin speculare, to look. So a speculator is somebody who looks very carefully at what's going on. And there's no problem with that. The problem begins when people don't know what to do with the information that they observe and start trading without making really good plans. So we have to be very careful with our plans, with risk management. But to look, to speculate, we can overload. So it is, as you said, the end of the year, and it's certainly been a crazy year, an insane year. If you like, let me take control of the screen for a few minutes. I want to show you some of the. I would like to show some of the key points about the S&P, and maybe take a quick look at the world markets, and then back to you, and we will go through all the major markets that you usually like me to review. How about that?
Mm-hmm. Yes, sure. You can take the control.
Thank you. So I go to, one second, go to Zoom, share screen, and here is my screen, and share. You can you should be able to see my screen now.
Yes,
yeah,
all good.
Okay, great. So a couple of things I'd like to look at together with you. There is a structure. So just about a year ago, at the end of December of 2021, at the place which is marked with this little down-sloping red arrow, I began to say and to write that we're witnessing the tail end of the bull market, that the bear market lies ahead. That view was confirmed when the market fell very heavily in January, February. And after that, if you look at this chart, here is the classical structure of a bear market. A bull market is marked by the market making higher and higher highs. And when it retreats, and every bull market has corrections end at higher levels also. So we have a pattern of higher highs and higher lows. In a bear market, this pattern is flipped on its head. So follow my cursor. The red arrow, of course, was the end of the bull market. We have a new low, then the market rallies. We have a lower high. We have a lower low, and we have a lower high. And in October, we had a lower low, and in November, December, we have a lower high, and the market turned down again. So this is really a pattern of a bear market, lower lows and lower highs. And until this pattern is changed, until this pattern is broken, we cannot say, oh, a bull market has begun. It's very dangerous to anticipate things. There is a very famous now retired money manager, very successful retired money manager who lives nearby in Massachusetts, Peter Lynch. He wrote a very good book, One Up on Wall Street. One of the things he said in his book that I thought was really very funny, he says, trying to catch the bottom is like trying to catch a falling knife. You invariably grab it in the wrong spot. Let the knife fall, and then you will see where it stops. So I think what will, the way this bear market can end is one of the two ways. Option A, the market breaks to a new low below the October low. There will be widespread panic at that time, and that's when I'm going to start looking for bullish divergences. That's when I'm going to start looking for signals that while the crowds are afraid, the market is actually getting stronger below the surface. And the tools that we use, and you will be seeing them today, allow us to make that decision, come up with that idea. So break that down to a new low. Another possibility, option B, is that if the decline that's going on now, and you can see that the market is, the S&P is below the value zone. It's below, the value zone is defined by a pair of moving averages, fast and slow. Yellow is slow, red is fast. So you can see that the market currently is below its value zone. The market is undervalued. If it bottoms out at a better level, at a higher level than in October, it will stop the pattern of lower lows. And then if it rallies above the December high, goes above about 4,100 for the S&P, it will now establish a higher high. So it first has to establish a higher low, then a higher high, and that's the bull market. My reading of the market is that the first option is more likely, but the market can do all kinds of things. So you cannot just make a forecast and say, that's it, I'm hanging my account on this forecast. You always have to ask yourself, what if it doesn't work? So I do think that this market wants to break to a new low, but then I ask myself, what are you going to do if it doesn't work? What if it doesn't break to a new low? Well, I'm going to look for this market to bottom above the October low and then rise above the December peak. And then I'll say, well, my first forecast didn't work out. I'm going to go with the second forecast. We're now in a bull market. I'm going to be a little later then, but still, when a bull market begins, you have plenty of time. So that's my outlook at the market in general. We're in a bear market, and I think we're approaching, I think the end of the bear market is not that far away. It's very unusual to have a bear market longer than, let's say, a year and a half. And it's already been a year. So I would, now I'm going out on a limb. Now I'm forecasting. I think that the bottom of the bear market is likely, we're likely to see it in the first half of this coming year. I hope I'm right. But let's take a very quick look now at what the international markets are doing. I know that we have participants from many countries, and here I have a list of 14 biggest markets in the world, other than the US. The US stock market represents approximately 30% of the entire world. And here come 14 stocks that follow. I'm taking them in the order how their symbols are, but in any case, Australia. Let's take a very quick look. Australia. I pushed the wrong button. Australia weekly chart. We can see the same pattern, lower lows, lower highs. And now Australia had a higher high, and it's trying to bottom here. So Australia is actually near of giving us a signal for a new bull market. Hasn't done it yet. It's still declining. But here we have a higher high than the previous rally. Possibly a bull market has begun. Canada. The pattern is very similar to the US. The latest attempt could not it tapped out below the summer rally, so it's still the structure of a bear market. Germany, the very strong rally in November, December exceeded the August top. So here we have a higher high, but a lower low. So again, Germany is another market that's under the question mark. This could be the end of the bear market, but we have to make sure that the low that is formed next stays above the October low. Question mark. Hong Kong. Difficult to judge. Hong Kong had a crazy bear market, and of course, the essential annexation, but China really moved in and did a lot to destroy the status of Hong Kong as an international center. It's becoming basically a Chinese province, and the market suffered all year. It is having this wild rally. I don't understand what's driving it. I'm sure it's some political forces, but again, the pattern of a bear market is in question. Japan. The pattern of the bear market is intact. It still hasn't made a higher high. France. Bear market is under question. You can see that the latest rally was higher than the rally in August. So we have a higher high, but we haven't got a higher low yet. But definitely the bear market is under a serious question. Singapore. The bear market is intact. Taiwan. The bear market is unfortunately very intact. You can see that, let me put the daily chart. You can see how Taiwan just collapsed 2 weeks ago. Again, I haven't been watching the Taiwan closely at all, but I suspect there was some terrible political development with their neighbor. UK. Again, we have a higher high than in summer. If we see a higher low and the market starts rallying again, we can recognize a bull market. At this point, it's just a big question mark. EWW. And by the way, I'm not looking at country indices. I'm looking at American ETFs that represent those countries, which actually allows me to trade them. These are tradable vehicles. Mexico. The bear market is in question. The latest rally went well. If it exceeds, if this rally exceeds its summer peak, this could signal the bull market. Very close. EWY, South Korea. The structure of the bear market is intact. Brazil. The structure of the bear market is intact. And India. Flat, neutral, but really hasn't broken the pattern of the bear market. And last, China. The pattern of the bear market is intact. So we reviewed 14 markets plus United States, and we see that most of them are either in bear trends or bear trend is under a question. We'll have our next meeting in January. I think we're likely to have, well, time helps. We will see whether it is really a new bull market or whether the bear market will reassert itself. But you can see how the signals are beginning to emerge in the world, that this bear market is not as uniform and as powerful as it was, let's say, 3 or 4 months ago. So let's not become heavy shorters while the bear market is under question. The best time to short was a year ago. Roman, I think I did what I wanted to do with this thing. Maybe I'll just one more chart. This is my this is the chart of my favorite forward-looking indicator, the new high, new low index. The weekly chart on the left, the daily chart is on the right. And you can see how the new high, new low index is really a super simple thing to construct. You take the number of new highs and you subtract the number of new lows every day, and then you draw a line. For the daily charts, for the weekly charts, a little more complicated. You have to average you have to add up last 5 days. But you can see that ever since approximately November of previous year, November of 2021, the weekly new high, new low index stayed below zero pretty much for all this time. However, the bottoms that it's tracing are becoming more and more shallow. So this could be this suggests that bears are becoming weaker. On the right is the daily chart of the new high, new low index, and you can see really a wonderful signal here. Let me just circle. You see, like this. How during the latest rally 2 weeks ago, the US stock market rally, this was the new high, new low index at the first peak. This was new high, new low index on the second peak. You see these diversions? I shorted it and was really a very profitable trade. I was actually in Italy, and I said to my wife, I'm not going to trade. I'm just going to relax or sightsee. And then I saw this signal, put on a trade, and basically one trade paid for the entire vacation. It wasn't my plan. Vacation was already paid for. But this is one of the sharpest signals in technical analysis. So in any case, that was 2 weeks ago. What about today? We can see that the new high, new low index is starting to rise a little. No clear message really there. But to me, the most important thing is the message of the new high, new low index on the left, on the weekly chart. Bears are becoming weaker, but bulls haven't come in with strength yet. So because of that, I'm inclined to give the current trend, which is the bear market in the United States, I'm inclined to give this trend the benefit of the doubt. I'm still selling short and haven't begun to buy. With that, Roman, let me stop sharing and turn the screen over to you, and then we'll probably go through those markets that you usually like me to look at. Fantastic. The DAX.
Yes.
I see. Yeah, the DAX. So, for those, since Roman mentioned that some people may be joining us for the first time, very quick introduction to what you see on the screen. This is the standard screen that I like to work with. I have this rule: 5 bullets to a clip. A trader is allowed 5 tools, 5 indicators, and you should stay with the same tools. Of course, when you have a powerful program like MetaTrader, TradeStation, which I showed you, there are hundreds of indicators. But you go to a restaurant with a big menu. You're not going to order 10, 15, 20 dishes. You're still going to get yourself, an appetizer, maybe a soup, salad, main course, dessert, 4, right? At most, maybe less. So you should do the same thing with trading. Find a small number of indicators that you know and trust and examine them. And another thing, time is very important in the markets. Everybody looks at the daily charts. I want to look at the weekly first, make my strategic decision on the weekly, and then, and only then, go to daily for precision timing. Where do I get in? Where do I get out? But the decision to trade long or short is from the weekly chart. So here is the DAX. You can see very powerful rally last couple of months. It's hitting +3 ATR channel. You look at the MACD histogram and you see the highest high in more than a year. So it shows it's a very powerful rally. MACD indicates the power of the market. Right now, near the right edge, the market is having a rest. MACD histogram is declining. Prices have declined down to the value zone. When I look at it on the weekly chart, I say, well, let me if the market is so strong and it's having a rest, it's declining. Let me look at the daily chart, see what the daily chart tells me. I go to the right side, and there's the daily chart. Oh, I promised to introduce the chart. So in the upper pane, you have a chart, weekly or daily, a pair of moving averages, and an envelope. Envelope helps you recognize when market is hitting an extreme. Next is a strip that tracks the behavior of the impulse system, which is, if we get a chance, we'll talk about it. It's something I invented that tells me whether the trend is up or down. And when the impulse system is, it's a censorship system. When the impulse system is red, I'm not allowed to buy. When the impulse system is green, I'm not allowed to sell short. When it is blue, I can do anything I want. So you can see on the left, it's green, bullish, and on the right, it's blue. So I look at the daily chart on the right. It's on the plus side. Just yesterday, you can see the spike below price on the price chart on the right. You can see how yesterday the DAX dropped and then came back up again. So it tested the low, and it didn't like it there. It rejected that low. A false downside breakout, a very positive sign. What I'm not too happy with is that MACD histogram has made a new low, Force Index has made a new low. When I see things like that, I don't trust really in the health of this rally. So if somebody held a gun to my head and said, I want you to trade the DAX, make a trade, I would have to buy it, because the weekly is bullish and the daily is rising. But it's not, but without a gun to my head, I would be inclined to let it pass, because I really don't like the indicators on the daily chart. I want to see that in the latest decline, indicators became weaker and they become stronger. Let's do the next one, Roman.
Let's look at EURUSD.
Okay.
Sorry.
So the strategic decision on the left on the weekly chart, the year-long downtrend of the euro got reversed, and you can see actually in the second pane on the MACD histogram how MACD histogram was becoming more and more shallow towards the end of this bear market, and there's this tremendous rally occurred. So the weekly chart basically says the euro is in a bull market. It's a bit overbought. It's trading near the upper channel line, but that's okay for the weekly chart. I'm less happy if it hits the upper channel line on the daily. We go to the daily chart on the right, and really what jumps at me from this chart is a trading method right here. Buy below value, take profits at the envelope. Buy below value, and even without trying to catch this extreme low, just as long as prices get into the value zone, like here, for example, in December, price got into the value zone and back to overvalue. And I think it wants to come back into the value zone now. So I would be just watching this chart and try to buy the euro when it comes below this red line, below the fast moving average. Let it come into the value zone. That will be the buying opportunity.
Thank you, Alexander. Let's look at gold.
On the weekly chart, you can see a similar, a similar reversal to the euro, and of course it's connected. Dollar is internationally priced in US dollars, so when euro rises, the dollar obviously becomes weaker, and people who sell gold want to get more dollars because dollar is weaker, and you need to get more of it to have the same purchasing power. So with that, the weekly chart turned up. Very powerful, very strong. But when we go to the right side of the chart and look there, I see something I don't like one bit. You can see in recent months, 3 attempts at a rally. First, second, and now today, actually, yesterday and today, the third. On the chart, it looks very nice. But if you take your eye lower on this chart and look at the MACD histogram and compare the height of a MACD histogram in November to what we're getting now, that's a divergence. Going further down, force index, you can see the height of it in November and how little of that we have now. So it's another divergence. When I look at things like that, I actually get my hands get a little itchy to sell it short. But I have I'm not supposed to satisfy this itch because the impulse system on the weekly chart is still green, and I think it's also green on the daily. And yeah, it is. And so that's really the main value of the impulse system. It doesn't tell me what to do, but it tells me very clearly what I'm not allowed to do. The impulse system is green, no shorting is allowed. I'm not allowed to sell it short, but I'm certainly allowed to watch. And when it stops being green, the thing will be a very nice shorting opportunity.
Let's look at oil.
Fascinating picture. The spike in oil in February earlier this year occurred when the war began in Ukraine, and the world was afraid of what's going to happen to oil supply, to energy supplies. And energy stayed high for the next several months, but then the energy really entered into a bear market. Oil declined from about 120 to about $90 today on the weekly chart. However, what I see now near the right edge of the chart, there was a bottom in September, and you can see the depth of a MACD histogram. Later in September, price came back into the value zone, a little above the value zone, and the MACD histogram went above zero. I call this type of crossover breaking the back of the bear. And then oil fell to a new low, and the MACD histogram fell to a new low. I'm sorry, oil fell to a new low, and the MACD histogram fell to a much more shallow low. So this is the bullish divergence, and it tends to mark bottoms. So you can see that the impulse system already changed to green on the weekly chart. It's green on the daily chart. There is also a beautiful bullish divergence of force index. So I would say oil is at the bottom and ready for a rally. Going to the daily chart on the right, I like to buy below value. So oil has just entered the value zone. So somewhere here, maybe a few cents cheaper, but I do think that oil is in the buying position now. And let me just add, not only about oil, but about any market. When I say it looks like a buying opportunity, it looks like a shorting opportunity, I'm certainly not giving you trading advice. it would be impossible to give trading advice to somebody whom I don't know personally. I don't know your risk tolerance. I don't know your capital size, none of the above. So trading advice under these conditions is impossible. But I know you're waiting to hear what I think. And so what I'm doing is basically thinking out loud. I'm going through the same process as I go myself when I'm sitting in front of the screen in the morning, creating a trading plan for the day ahead. Only here I speak out loud. But that's what I'm doing. I'm sharing my thoughts, my findings with you. But please, it is not trading advice. Now, if you do decide to trade something that we discussed here in class, you must create a written trading plan. Without a plan, the whole trade is a joke. It's a gamble. You must set up risk control parameters. We talk about it every once in a while. Read about it in my book, the 2% rule, the iron triangle of risk control, those things. So that's the story. All right. What do you want to look at next?
Thank you, Alexander. I think the last instruments that we have, and probably in some our participants will be interested, it's a Bitcoin. So just let's quickly look if something changed, let's say, for a past session.
You know, I began saying about Bitcoin a good couple of years ago that this is the king's new clothes. You know, the king is naked, the king's new clothes. And of course, that was a hugely unpopular opinion in those days. But as I look at this chart, as I look at this chart, oops, I just opened the chat window. Don't know how to close it. Well, I'll just like okay. Bitcoin went from something like 66,000 to about 16,000. So it lost 75%, 75% of its value. And people who were early, people who bought Bitcoin when it was cheap, made and who sold in time made money. But anybody who is holding Bitcoin, anyone who bought it in the last 2 years is underwater because Bitcoin is going down. It's you know, the scandals that surround it, the whole thing. I know some people like to trade it, not me, but in a trading sense, on the weekly chart, I can see that Bitcoin sort of found this bottom at around 16,000 and keeps banging on that bottom, but not getting very far. Looking at the daily chart, there's a bit of a rally that began in November, made this completely strange high, and made a low yesterday, which looks like a kangaroo tail. So I don't see any clear signal here. It might have a little sort of, with so many people short, the market just wants to punish them with a rally. Or some more scandal may emerge. And you know, there's this company called Binance. They're having massive withdrawals, which they're meeting so far, and meanwhile, all the accounting companies refused to confirm their books. They're afraid. They're afraid if they give them if they say that Binance is fine, and then turns out it's not fine. Of course, the accountants will be made to pay. But it's a strange situation. Constant withdrawals and inability to hire an accountant. So to me, the king's new clothes has started to come apart.
Thank you, Alexander. I think we looked at all, let's say, different markets and different instruments. and we can look at some stocks which I sent to you, so I
Yeah.
can open it one by one, and also
Yeah.
just to say to our audience, so we'll have, I think, a couple of minutes for some questions. So please think about your questions, leave it in chat, and later on I will help to Alexander to check the questions.
You know, I saw a few questions actually there, and you know, the stuff that you've sent to me, I must say, they're all kind of flat, nothing much is cooking. But one of our participants asked for two very interesting stocks: Nike, NKE, and Tesla. Maybe let's take a look at those, if you don't mind, if that's okay with you.
Yes, of course. Let's look at. Yes, it's here.
So, Nike.
So just need a couple of seconds for
for the chart to generate. But by the way, there is a curious book I read 2 or 3 years ago. Philip Knight, the man who created Nike from nothing, from his parents' bedroom, from his parents' guest bedroom, wrote a book about how he created the company. Interesting read if you're looking for a good business autobiography. It's good. In any case, Nike traded. By the way, look at the weekly chart and look at the left side. Look at this double top with a false upside breakout, and look at the MACD histogram below. Peak A and peak B, and in between this drop that broke the back of the bull. Now this is the pattern. You should print it out and hang it near your desk and say to yourself, next time I see something like this, I'm going to sell this short. It doesn't get any prettier than that. And then, of course, the MACD histogram gets deeper and deeper and everything. But the double top, that was really the thing of beauty. Now, as we move to the right edge, that was unfortunately, Admiral or any other company does not offer us the opportunity to trade in the past. They only allow us to trade at the right edge of the chart. So we should spend more time looking at the right edge. So okay, perfect. Nike jumped something like $15 today. They declared earnings yesterday after the market closed, and apparently the earnings were very good. The market loved them. But what do we see now? Nike is right at the resistance line at about $117. When I look at the daily chart, what I really don't like about this chart, and I don't have a position in Nike, is this finger to the sky. Nike opened up, ran up to a higher high, and it could not hold that high. So on this fantastic news, Nike is struggling. My hands were itching to sell it short. I couldn't do it. We can see the impulse system is green on both weekly and daily charts. But I wouldn't be surprised at all if in the days ahead we might get a very nice shorting opportunity there. But at this point, nothing. Just wait. You know, markets are chaotic most of the time, and don't get this delusional idea that you can approach the market any day and find the trade any day. Some days you can, and some days it's just chaos and you can't. So don't push yourself. I look at something like this and say, "Gee, this is really a beautiful short developing. But what about today? Oh, today nothing. Today nothing. Next week maybe." Okay, so that's Nike. A negative lesson.
Tesla.
So Tesla. Samir was asking, what are the yellow dots at the bottom chart of Australia? Well, those dots are on all of my charts. These dots, it's an indicator called MACD X over. It shows me at what it shows me at what level the impulse system will change color. The impulse system is described in my book, The New Trading for a Living. Tesla. Tesla had a split. I'm trying to remember. Roman, do you remember when Tesla had a split? I think it was 1 to 3.
1 to 3, yes.
1 to 3. I remember talking to somebody in summer who was very bullish on Tesla, and Tesla was about $1,000 and $950 something. I was shorting, and this woman was super bullish on Tesla, and said, "Well, I'll buy it when it comes down to $100." She said, "You're joking." Well, yeah, I was joking. It's now trading at $138, but of course, without the split, it would have been at 500. So, not to exaggerate. In any case, the weekly trend is down. The weekly trend of Tesla is down, right? The lower lows and lower highs. Perfect pattern. On the weekly chart, it's hitting the lower channel line, which is a very oversold level. And this is really where buying opportunities occur. So the impulse system is red on the weekly chart, but of course, I'm allowed to watch, if not to buy. And I can say, well, when it stops being red, I might become interested. But then I look at the right side where the daily chart is, and I can see that MACD histogram is deeper than it's been in since October. The bearish trend is very strong, and so I looked at it and say, now. The book by Peter Lynch, One Up on Wall Street, trying to catch a bottom is like trying to catch a falling knife. You invariably grab it in the wrong spot. This is a falling knife. Stand aside and wait. It will become a buy at some point, but that point is not now.
Probably Mr. Elon is paying too much attention to Twitter.
It's popular, most people I talk to hate Musk and criticize him and this and that. I'm afraid that I have a more positive opinion. I mean, the guy is a genius. He's a crazy genius, but he is a genius. Look, he created the most successful electric car company. He is launching rockets better than any government. He developed this internet thing that actually saved Ukraine, Starlink. He developed a company for building tunnels, and he developed a company that's going to start implanting computer chips into human brains. I mean, he is such a he is full of revolutionary original ideas, and he implements them, and now Twitter, of course, but he is hyperactive, has 9 children, plans to have 30, so he is a crazy genius, and of course he makes mistakes along the way, so Twitter, of course, I mean, he needed a Twitter like he needed a hole in the head, but now he is stuck with it. And of course, people becoming afraid, so they're starting to sell Tesla. But there's another reason for Tesla going down. Tesla used to be the only game in town if you wanted to have an electric car. Now there are electric cars coming right, left, and center. So suddenly Tesla is getting competition, rapidly losing its unique advantage. But yeah, in any case, I think the guy's a genius, but a crazy genius. So it's If he just focused on one company, but in any case,
he just can't. He just can't. Too many ideas.
Yeah, and too many children. He wants. He says he plans to have 30 children because he feels that humanity needs him to spread his genes. And it's not, it's not 9 children with one woman. It's 9 children probably with 7 or 8 women altogether. So, yeah, interesting. Somebody's going to write a book. Book is going to be a bestseller, not me. Let's take a look. What else? What else folks are asking for? Zoltan is saying, can you imagine $20 for Tesla? I don't think so. I don't think. Karim is asking, is the MACD indicator you showed same as on MetaTrader? Yes, of course. Heinz has a company that's a competitor of Tesla. BYD. Let's just take a look. I think I know the company just for the fun of it. I'm not even sure you have it in your system because it's not a big company. BYD, blue, yellow, D.
Yes, but it's Boyd Gaming for us. What I see.
Okay, whatever you do. Yeah.
I'm not sure. I mean, BYD. It's, let's say, I think Chinese car manufacturing
if it's
company.
Chinese, I'm not looking. I don't trade Chinese companies. I'm an anti-communist. China I do nothing with.
That one is Resort Casinos, so that's why I was confused because it's another one. Maybe maybe I just also sent you about Ford, just to compare because I had, let's say, in the list.
No, it's a game. It's not the right company. Yeah, Ford, for example. Yeah, Ford. Yeah. That was actually one of the companies you wanted me to look at. Ford is being beaten up, but refuses to die. You can see how it drops to $11, $10, $11, and recovers. Drops again and recovers. Drops again. And Ford is off of the latest bottom. When somebody tries to kill a stock and after 3 times it's still alive, that stock is not going to die. So actually, I think Ford, as soon as impulse allows, which may be very soon, will become a very attractive opportunity. Gabriele is asking to repeat the impulse release colors. The impulse system is a censorship system. When the impulse is red, no buying allowed. When the impulse is green, no shorting allowed. So the signal occurs not by color, but by the loss of color. So it's now red. I'm bullish on Ford. The impulse system is red. Once it stops being red, I'm allowed to buy it. It doesn't have to be green. It just has to stop being red. Same thing for the daily chart.
Yeah, and actually in MetaTrader we have, let's say, this clarification for if we put an arrow, so it shows, let's say, no loan allowed, like as I shown right now. So just to be sure. Okay, so probably 1-2 minutes if it will be, let's say, any other questions from our audience. Yeah, so let's just to get, let's say, the last question for session for today, so the person will be lucky also to get answer to this question. So hurry up, type your question as we are approaching the end of our today's.
While people are typing, we do have a few minutes because, as I mentioned to you, I was delayed getting into the room. I had to move from my office to my wife's office because of the construction guys who showed up. Markets tend to be quiet around the holidays, and historically they tend to be a little bullish. People are in a happy mood, so historically markets are good around this time. It's extremely important to see what markets do in January. There is something called the January indicator. The way 5 days in January go, very often they color the whole year that way. Holidays are over. Everybody overate, everybody goes on a diet, joins sports, joins the gym, never goes there, but joins it anyway, and looks at stocks and saying, what the heck is going on here? What am I holding? And people start selling stocks on which they lost money. So early January tends to be a sort of cleansing time. And I would worry about this market in January. Now, if I am wrong, and the market just takes off in early January, we could get this reversal about which I talked earlier today. The two ways in which the bear market can end in this new waterfall decline to new lows to really scare everybody, which I think is more likely. Or it can hold above the October lows and take out the December highs, and then we're in the new bull market. Trade it, don't argue with it. If I had some kind of magic device to forecast exactly what will happen, I would own the exchange. Without this device, I can only say these are the two scenarios, and you have to be very careful to see which one is developing and act on it, not to argue. Let's see, any questions? Apple, and actually, Alessia is asking to look at Apple, and you sent me that Apple request earlier. Let's take a look at Apple, one of the biggest companies in the US, in the world. So, weekly chart on the left. Well, isn't that a bullish divergence? Isn't that a false down? Well, yeah, I see you. I see, Roman. You're drawing the chart from that low that was in May, right? There is a certain bullish divergence from there. There is also bullish divergence in a more recent time frame. The bottom that was what about in October, November, and Apple broke through that bottom. Apple broke through that bottom, and then rejected that break. So we have this little kangaroo tail going down. The impulse system, there's clearly bullish divergence, both a broad one and a narrow one. There is also a bullish divergence of the force index below. I do think that when this market bottoms out, the giant stocks that got beat up in the fall, Apple, Google, the Amazon are going to do very well. Those will be the stocks to buy for the long haul, for the long run, when the market bottoms out. And here's an example. Apple is refusing to die. False downside breakout on the weekly. We go to the daily chart. No divergence, unfortunately, not a perfect signal. You can see how Apple broke below support and closed. I think it wants to do some more work. I think it wants to do some more bottoming work, but it looks like it's starting to develop a tradable bottom. It's a chart not to be forgotten. It's a chart to be printed, put on the wall, and buy it when the daily becomes a little more bullish. I don't like this new low at the right edge. That's not something I enjoy. So one last quick look into the Q&A. Suddenly everybody got very active. Rain is asking where he can download those indicators. Obviously, it's on Admirals site. Philippe, come to my trading room. The best book. Actually, my most important book, the book that's really sort of my life's most important book, is The New Trading for a Living, not the original Trading for a Living. That book is almost 30 years old. The New Trading for a Living. So let's see. Roman, any comment from you? If not, I'll wish everybody a very Merry Christmas, Happy New Year, and looking forward to seeing you again in January.
Thank you, Alexander. It was happy to have the whole year with you, and let's say to have a next year. So from my side and from behalf also from our participants, I read, let's say, some comments, let's say from chat, from YouTube. So I also say thank you for your classes, for your attention to us, and also wish you Merry Christmas and Happy New Year.
Great. Thank you very much. Looking forward to working with you again in the new year. Always a pleasure.
Thank you, Alexander.
Best wishes.
And dear participants, so to answer another questions about indicators, I just want to have a couple of minutes to share with you this information, how to use them and how to download them. Actually, how to use them. So you saw my MT5 platform where they're installed, and the way how we show it, let's say, during the class. And also we, together with Alexander, with his permission, of course, we made them available for free of charge for our clients with real accounts with a balance more than 200 euros on it. And actually, you can have the same view, the same way how we just showed. It's more or less the same how Alexander using his system and TradeStation, of course, with a little bit changes because it's different software, but it's available. So if you want to request and to test and to try to implement it to your trading, because of course it is important to understand that not all systems can be used in the same way, but you can implement to your system and try to test, let's say, different approaches, as for example, just Alexander shared with you his. So I'm sharing right now in chat the email elderdisk@admiralmarkets.com for those who are watching us on the YouTube, so it will be added in the description of the video. And all you need is just to send a request to this email, and if you have a real account, so we will send you back, let's say, the list of indicators, the chart templates, a video tutorial how to install and how to add them to your platform. If you are not so far our client without a real account, anyway, you can send your request, and our beloved sales team or customer care team will help you to find out how to open an account and with all connected questions. So yeah, feel free if you have any questions regarding indicators, so just send on this email and we will answer you shortly. And also what I said previously and what Alexander said, let's say, about his book, let's say the latest book he made, The New Trading for a Living. I have it here and I have it for one for you. And just because we have some gentleman contest together with Alexander, which we organize on our YouTube channel, Admirals Global YouTube channel. Right now, I'm sharing the link again one more time to the channel. So if you're not subscribed, please do. If you're watching us on YouTube already, so also please subscribe, don't forget. And we have this contest where it's possible to get this book with Alexander's signature, so we will send it no matter where you are, in Australia, in Chile, or whatever country it can be. So we'll send it to you. Everything you need is just to follow our simple rules. I will try to explain. So firstly, you need to be subscribed to Admiral's YouTube channel, which link I just shared. So like the latest video, so that one will be, will have, let's say, the plan for 2023, like the latest video with Alexander. And in comments, suggest a trade for one asset. It can be stock, it can be index, currency, crypto, whatever is traded is Admirals, it's allowed to pick up for a contest. So for this contest, you need to suggest entry price, stop loss level, take profit level, and date of post. So it's, let's say, some I would say paper trading, right? So it's, let's say, you expect, let's say, some trades. So for example, if I have, let's say, here on my example, so I plan that I will go short, let's say, this price, I will put stop loss here and take profit here. So if it will be already the price which you want to enter it, that's also fine. So you can put it, let's say, for this day, where it is, let's say, entry right now, this current day. So that's also fine. You can put it here, and later on, before our next class, which will be on 18th of January, I will calculate, let's say, all suggestions of stocks, let's say, during this contest, and those whose position will bring, let's say, biggest impact in terms of percent. So this will be our winner. So we're not apply, let's say, any, let's say, different things, just firstly, if it's take profit executed, so that's the ideal trade. And then if it's not, so we just calculate for a position who have, let's say, the biggest floating profits, right? So something like this. So we have this contest starting from tomorrow, 22nd of December 2022 till the 18th of January 2023. So you can participate on this range. So we can do it straight tomorrow or next week. So that's also fine. And also important thing that is prohibited to edit comments. So if it will be signed that it was edited, so we will not able to count, let's say, this suggestion. And of course, you can leave your questions again on the YouTube channel for any questions you have to Alexander, something you want to discuss, let's say, or on our next class, which we'll have on January. So feel free to do. It's allow us to get your questions in advance and to go through them quite fast, to get to be able to answer, say, more questions during our limited time of session. So please do this. And yeah, and that's it from my side. So from my side and from Admirals side, I also wish you Merry Christmas. I wish you a Happy New Year. And also later on during our sessions, so we have sessions with our team in different languages in different countries. So that's why that one is, let's say, for global, like say on English language. But if you're interested, let's say, on some classes, let's say on your language, because I know that we have people from different countries, from different areas, from different languages. So just choose your language on our website, go to education section and to webinars, and you will be able to find out, let's say, classes where we are talking about trading, investing, different things, let's say, which help us to, let's say, different parts, different steps of investing. So feel free to do this. And yeah, from my side, thank you for your attention. Thank you for participation. Thank you for being so active, let's say, during our class. So next time we're going to meet, let's say, in January, as I said. So one more time, Merry Christmas and Happy New Year. So thank you and goodbye.